Well guys, I'm back, and it turns out I actually needed a little bit of a refresher. Not saying it was the best time ever, but not saying it was the worst. I was gone yesterday, that's why I didn't really upload, and I was gone for the majority half of today, and what I see coming has been different than what we've seen over the past 2.5 years of holding AMC. And I know you might be thinking to yourself that at this point, you never know if AMC is actually going to hit the way we thought it was going to hit. But the scenarios are much different than we thought leading up to this. So in today's video, I want to touch on what's happening right now with the banking crisis, what we thought was happening with haircuts, and essentially why banks are loading up on AMC and some at even a higher price than what's being reported to us. Without further ado, guys, please hit the like button on this video, hit the subscribe button, and drop a comment. Let's get into it. So JPMorgan just bought 150 AMC call contracts, which is 150,000 shares worth, valued at $752,000. This was filed today. They also hold 2.14 million worth of AMC shares at $6.33 for an average cost. Now, according to Crystal Ball, it's interesting how JPMorgan doesn't spoof AMC like Goldman and other banks do. Recall also that Adam Aaron's shares are managed by JPMorgan. Now, what he's talking about right now is we see day in and day out Goldman spoofing the price on the order book on AMC. Now, what I want you to take out of this, and keep in mind, JPMorgan is the world's largest bank. Now, Jamie Dimon of JPMorgan has said that people going short and then making a tweet about a bank, the SEC should go after them. They should be punished to the full extent of the law. He further on goes out in an interview and states a problem with short selling and short attacks on banks, but that is not all. This is where game over comes into play, and I know you've seen this before. JPMorgan CEO urges the SEC to ban shorting bank stocks. Now, this is where it all comes together. You see, in September of 2008, the SEC prohibited short selling of banks. And in October of 2008 was the world's largest short squeeze, at least that we have seen that's relative to us, which is the Volkswagen short squeeze. 1 month later than the prohibition of short selling banks. And now it is on the tip of Gary Gensler's tongue whether to make this move once again or to step back from this move. Recently, you might have thought, well, you know, banks have to be protected, and if they do this, they're going to be protected, and then it's not going to make AMC squeeze. But really, take a look at it from the conflict of interest in who's shorting these stocks, who's shorting AMC, and where it all ties together. All of the bigger players come together, and this is exactly where the game is about to hit the end. This is exactly where AMC has a chance to really make its move. But that's not all. US bankers as a whole have urged the SEC to probe short sales, reduce abusive trading. So it's not just JPMorgan. Taking a step back and looking at how bad the banking crisis actually is, SoftBank's Vision Fund just reported an annual loss of $32 billion, which is the biggest loss in its entire history, ticker symbol SFTBY. And all of these big names, which we know are most likely shorting AMC and or lending out their shares to short sellers, are going under the rug, as it looks like Vanguard is trying to keep Virtu afloat, as Vanguard Group now owns 10% of Virtu Financial, and Virtu is being investigated for multiple things, including securities fraud. This is where the bigger players turn against each other and start throwing each other under the bus, because everybody has to save their own ass. JPMorgan has to throw short sellers under the bus, the SEC has to throw Virtu under the bus, and other corrupt institutions for committing wrongdoing in the market. But not only that, which we're going to touch on, even the DTCC has to save their own ass. The biggest US banks will be hit with nearly $16 billion in extra fees over the next 2 years under the FDIC's plan to recover losses associated with attempts to rescue Silicon Valley Bank and Signature Bank. And Bank of Nova Scotia to pay a $15 million penalty for widespread record keeping and supervision failures. Speaking of all of this, according to a trading firm, the stock clearinghouse DTCC has been responsible for leaking sensitive data. Concerns arise among traders that the data feeds provided by the Depository Trust and Clearing Corp could potentially disclose the buying or selling activities of large investors in the stock market. as institutional brokerage firms. Reports suggest that the clearinghouse responsible for processing U.S. stock trades is selling data that can be utilized by sophisticated traders to gain an advantage over traditional investors. And you can see that right here. Unusual Whales tweets, the Depository Trust and Clearing Corp is leaking sensitive trading data and is selling data that sophisticated traders can use to profit at the expense of more traditional investors. So even the DTCC is now breaking rules and committing wrongdoing within the market. For what? To save their own ass. It all comes down to the bottom line. Now remember, in the January 2021 squeeze, who is the only entity that bailed out Robinhood with a 9-point-something billion dollar bailout? The DTCC. Who's going to have that money when the time comes around? When the time comes again? Absolutely nobody. AMC is about to rip heads off. Speaking of that, funds are loading up, including JPMorgan. Highbridge Capital Management LLC holds 50K shares of AMC worth over $1.49 million filed today. But that is not what's actually crazy about this. What's actually crazy about this is MarketWatch has been day in and day out providing wrong information on AMC's market cap and the essential value that it would be valued at. Now, Highbridge Capital Management just purchased these shares filed today at an average cost of $29.88, bought in Q1 2023. Why did they pay so much? Is that the going price for real shares? You guys let me know down in the comments down below, because we literally just talked about how 15 times of the float over is rehypothecated and repurchased. Is this the cost of getting real shares? Now, SEC Chair Gensler has stated, in quotes, many hedge funds are receiving the vast majority of their repo financing in the non-centrally cleared market where haircuts or initial margin requirements are not necessarily applied. This might create greater risk in times of stress. So Gary is telling me that the hedge funds haven't even felt the haircuts over the last 2 years. That's huge. We've been through at least 3 major haircuts for collateral in the last 2 years. What the hell are they going to pay with? So this is exactly how you could possibly force margin calls. The risk comes in time of stress. This is when hedge funds are about to actually feel the haircuts that we have been talking about, basics, contracts, all of these stuff leading up to this banking crisis. And this is what I got for you for right now, but that is not done, because I am going to continue to work on a few things that I have to push out to you guys and that you have to watch as soon as possible. So make sure to have post notifications on. And if you guys each want up to 20 free stocks valued at $2,000 per stock, so you're getting a chance at 40 grand, use my link, download Moomoo, and make a deposit after you sign up to start earning free stocks from there. And for anybody in Australia, you're guaranteed 10 free AMC stocks plus 10 more on top of that when you sign up using my link and make a deposit into your Moomoo account. That is it, guys. Make sure to join the Discord. The link is under the video so you can talk with me on the daily. We have options trading alerts and we talk stocks all day long. I love you all. Lottery Stocks out.